KVB PRIME, developed for global traders, growing together with you.
Welcome to KVB Prime Weekly Market Commentary. This week, our topic is US records 20.5 million non-farm job loss. EU economy faces deep recession. Over the past week, the foreign exchange market was relatively stable, with the mainstream currencies showing optimism. The US and many EU countries have announced plans to lift lockdowns on the coronavirus outbreak, boosting risk appetite in the belief that the peak is over. Investors' concern about the global economy has relieved to some extent, providing support for the mainstream currencies bullish. The Australian dollar performed the best, with 1.78% weekly growth. Australia's March trade surplus hit a record high, raising 174% to 10.6 billion. This was helped by a surge in the Australian iron ore exports as Chinese factory reopened. Australian PM Morrison said on Friday the country would be reopened with 3 steps plans, and it is likely to fully reopen as early as July. Economic data in the US continue to be depressed. Despite the stimulate package, the labor market has been damaged, the hospitality industry in particular. The latest non-farm payroll report showed that the US economy cut 20.5 million jobs in April, lower than the expectation of 22 million. The number of job cuts is even higher than the previous peak during the global financial crisis. Further, the unemployment rate jumped to 14.7%, below than the expectation of 16%. Claims for unemployment benefit rose 3.2 million in the past week, bringing the total number for the past 7 weeks to about 33.5 million. On the upside, 18.1 million job cuts were temporary and will return to work as soon as the states reopened. Notably, the market increasingly expects the negative rates will be issued by the federal, but the chairman has dismissed the possibility and said it will be a wait-and-see period for now, and no further actions at this stage. In Europe, Germany's High Court ruled last Tuesday that the Germany Central Bank must stop buying bonds for the next 3 months unless the European Central Bank (ECB) proves the needs. Since 2015, the ECB has bought nearly 3 trillion euro bonds to prop up the Eurozone economy through low borrowing costs. However, the High Court said ECB was beyond its authorities. More importantly, the ruling caused a loss of confidence in the euro. Thus, Europe down by 1.3% on the week. Analysts believe the ruling brings more uncertainties and the euro could continue to depreciate with weak PMI data across the EU. Last week, the UK announced its decision to keep interest rate at a record low of 0.1%, but the Bank of England said it could provide more stimuli as early as next month to support the economy by expanding its bond buying program if necessary. The bank forecast that the UK GDP will fall by 30% and unemployment rate will double to 9%, but GDP will rise by 15% by 2021. Unchanged rates help the pound narrow its losses and close at 1.24, down just by 0.69% for the week. In the coming week, the UK will release industrial output rates, first quarter GDP, and other economic data. Investors should be keeping an eye on them. Now let's talk about the weekly highlight for major currencies. US dollar index went up 0.71%. Europe went down 1.3%. The pound went down 0.69%. Australian dollar went up 1.78%. Gold price went up 0.22%. WTI went up 15.72%. Brent went up 19.76%. Dow Jones and S&P 500 both declined 2.89% and 3.83% respectively. Now let's talk about the weekly asset analysis. The US dollar index continued its fifth week of oscillation after falling from the recent upper resistance 103. It oscillates between the boundaries of resistance 101 and the support 98.3. The current volatility remains consistent with last week's pattern. However, the boundary continued to narrow down, and the triangles become more obvious on the daily level. For this week's trading, it is important to watch for breakout opportunities between the boundaries of resistance 100.4 and support 98.7. Further, there will be more trading opportunities after breaking through the second resistance 101 or support 98.3 on daily level. Similarly, the Europe has its own triangle patterns that should be monitored this week as well. The resistance 1.1020 and support 1.0720 are the first prices to watch. Once a breakthrough is made on daily level, it threatens the second resistance 1.1150 and support 1.0630. If the second layer of protection is also broke through, there will be a bigger movement in the market. Traders should monitor the trading opportunities after breakthrough the 5 weeks oscillation. Similar to the euro, the pound has struggled to find a breakout against the US dollar this week. Thus, the trading opportunities will depend on the possibilities of a breakout. Short-term resistance and support are at 1.2460 and 1.2260 respectively. If one side is broken successfully, the next level of resistance 1.2640 and support 1.2160 will become important. Because the breakthrough will provide further trading opportunities, the traders should pay attention to them. After gold recorded a 7-year high at 1,747, it quickly entered the downward adjustments, then quickly returned, complete a V shape at a high level, and this oscillation has lasted for almost a month. Similar to the aforementioned products, the trading opportunity associated to the breakthrough. If the resistance 1,722 and support 1,680.5 are broken through, the trader should note the further impacts on 1,747 and 1,662. From the oscillation and candlestick patterns, the gold is likely to rise. Rather than long position reserved downwards, it is worth noting that the trading strategy can be finding a clear breakthrough point before entering the market. Thank you.